So the news is out. The ECB has cut rates to a record low, but what could Draghi's next steps be, and what could it mean for you? We have Jim Wyckoff's thoughts next. Jim Wyckoff joins me this very busy Thursday morning. Jim, thanks for being with us.
Hello, Daniela. Always nice to be with you.
Jim, let's start off with the news of the day. The ECB dropping its benchmark rate to 0.25%. That's down from 0.5%. The news comes as the Eurozone reaches a 4-year low in inflation. A lot of people were calling this move unexpected. That's what a lot of news headlines were saying. But was it really unexpected? Jim, what are your thoughts?
Daniela, I would call it somewhat unexpected. I think the majority of the marketplace was maybe expecting the ECB to make a move at its December meeting. That's when some fresh statistics were to be released or are to be released by the ECB. But today's move should not be that surprising. We had some inflation reports come out this week and last week that suggest very low inflation in the European Union, almost to the point of being deflationary, and deflation is a very bad phenomenon for economies. So I think what the ECB did was embark upon lower interest rates, easier monetary policy to keep the tepid EU economic expansion going, and also to ward off this worrisome deflationary scenario.
Jim, I guess some were surprised since they thought Draghi would wait for further evidence of falling inflation before pulling the trigger. What do you think made him do it?
Well, Danielle, I think these reports that came out on inflation just the past week or so are worrisome and surprising. The OECD just on Wednesday came out and said worldwide inflation on an annual basis in the 34 major economies was only 1.5%. That's down 2 percentage points from the previous month, 0.2% from the previous month. So that is, it's a worrisome thing when you think about the potential for deflation in a marketplace and in economies.
So as the news came out, Jim, we all saw the euro head lower. Is this what the ECB and Draghi wants? Do they want a lower euro?
Daniela, I think from a tacit perspective, all the central banks of the world want their currencies to be deflated because it augurs for better exports, a more vigorous trade environment. So, yeah, I think that's what Draghi wants. The thing that pressured the gold market, not only the declining euro, but you saw the U.S. dollar index spike higher following the ECB news. And also today's U.S. GDP data gave the U.S. dollar index a further boost. And that GDP data came out right after the ECB announcement.
And we'll get to that now, Jim. We did see stronger U.S. GDP numbers out. We also have jobs numbers coming out tomorrow. Will you be paying attention?
Yes, and Daniela, the U.S. GDP data on Thursday makes it even more interesting what Friday's jobs numbers, specifically the non-farm payrolls number, is going to be. If we get a strong number, a stronger than expected number on Friday, that could really activate some volatility in the marketplace, including the precious metals.
All right, Jim, let's talk about the latest feature you've introduced to Kitco.com, your Wyckoff Daily Risk Rating. It's part of your AM Roundup, and today you gave a risk rating of 7.0.
Daniela, I've been following markets on a daily basis for 30 years now, and it's paramount that an active trader or an active market watcher knows the daily risk appetite of the marketplace. And there's several markets to look at that to get a gauge on the risk presently in the marketplace, whether it be a risk-on trading day where you have traders more confident about the marketplace, and then you have risk aversion where you have maybe some geopolitical uncertainty in the marketplace that causes traders to pull money away or to move to safe haven assets like gold. All those events, potential events, I have combined into one index price from 1 to 10. It's in other words, it's a simple gauge of today's risk appetite in the marketplace. A reading of 10 is extreme market anxiety, is extreme risk aversion, such as an example would be a unexpected military confrontation in the Middle East that involves shooting. On the opposite end of the spectrum, Wyckoff's risk rating of 1 would be a euphoric jobs report that would rally the stock market and put downside price pressure on safe haven assets like gold and US dollar index.
So Jim, 7.0, relatively high.
7.0 was relatively high on Thursday, Daniela, because we had the ECB news that came out that roiled the marketplace a little bit. Probably going to have a reading of 7 again on Friday because of the U.S. jobs data that's going to inject, at least beforehand, uncertainty into the marketplace.
Let's get to one of your staples now, Jim Wyckoff's market rating. What grade will you be giving gold and silver this week?
Daniela, today's price action in gold slipped my Wyckoff's market rating into the slight bearish camp from a neutral reading. We've seen some selling pressure this week, just some uncertainty, lack of bullish news in the marketplace. So I'm giving a 4.5 rating to gold. For December COMEX gold, we've got stiff overhead resistance at the October high of 1361.80, solid technical support at the October low of 1251. Now for silver, still a neutral rating of 5. Just a choppy sideways price action in silver. For December COMEX silver, we've got resistance at the October high of 23.095. Got solid technical support at $21 an ounce.
Jim, that's all the time we have today. We'll see you next week.
Can't wait till next time, Daniela. Bye-bye.
And thanks for watching this week's edition of Technically Speaking with Jim Wyckoff. We'll have more for you throughout the day on Kitco.com. In the meantime, you can email us at newsfeedback@kitco.com or follow me on Twitter @Daniela Cambone. Thanks for watching.